What is up, guys? Today we are doing some Credit 101. We are going to be talking about what factors make up your credit score, by what percentage, what factors matter and what factors don't. And I'm also going to be sharing with you why that collection account that is on your credit report might actually be helping you more than it's hurting you. Crazy stuff, y'all. Let's jump right on into it. What's up, guys? Credit Solutionist here, owner of PX Credit Solutions, where we help you secure your financial future today. I am also the author of the 90-Day Rapid Repair ebook. It's a free mini ebook that you can get at my website right here, www.fixmyficonow.com, to get your credit journey started right now. In as little as 90 days, you can get a credit score increase. So go to the website, download the book. It's a free gift from us to you, just as a thank you for checking out the page. All right. Now, let's hop into it. Okay, factor number one that makes up your credit score is payment history. This takes up a whopping 35% of your entire credit score that is, created by the algorithm. This is so important, you guys, because if you have piss poor payment history, I don't know, I love saying that phrase. I'm so sorry. Oh God. But if you have terrible payment history, I am telling you, you are going to be in a world of pain. Okay. Because if I were a lender and I was trying to decide if I was going to loan anything to you, if you have terrible payment history for like the last maybe 2 to 3 years, I would think twice about loaning to you. Or if you had really bad payment history, I may still decide to loan some money to you or, give you credit, but I would actually charge you a super high interest rate because I am taking a gamble on whether or not you are going to pay. Okay. So your payment history definitely matters. And pretty much any history that you have that has happened within the last 24 to 36 months, that is what's going to hit you the hardest. That is what all of the lenders are looking for. Okay. So 35% of your credit score depends upon payment history. Write it down, rewind this, do what you need to do. But that's the biggest one. All right. On to number two. I was going to start number two, but I got a little bit of fuzz. Number two is your debt versus limits. So this is basically how much debt you have out there compared to how much credit you have been extended. So let's say you have $10,000 cumulatively in credit that has been extended to you. How much of that do you have that's floating out there that remains unpaid? So in our $10,000 example, let's say you have the $10,000 that, has been granted to you over a series of credit cards. If cumulatively all of your debt, when we calculate it together, if it's anywhere over 30% of that full $10,000 that appears on your credit report, you are immediately going to start to get dinged, okay? Because debt versus limits makes up a whopping 30% of your credit score. Okay, 30%. Now, the good news is because this is such a large amount of your credit score, if you were to, get that debt under control and you were able to get all of your cumulative amounts under 30% altogether, meaning you have less than $3,000 of that $10,000 debt out there, you are going to see a significant increase in your credit score. Okay. A lot of people say try to get all of your debts below 10%, but honestly, you're here at this channel because you are just now learning how to restore or build your credit. So I am not going to tell you to shoot for 10% when 30% will still do the job. Okay. It's up to you whichever way you want to go, but debt versus limits makes up 30%. All right. Number three. Okay, next is good old credit history. There's so many layers to this one. I'm not even going to go through all of those today. Like I can make a whole separate video about credit history and how it matters and how you can manipulate it and all that good stuff. But credit history is the length of your credit or the length of time that you have had credit in your name and your social security number. So for me, I famously say that I have about 18 years of credit history. Do the math. Whatever. But anyway, credit history makes up a whopping 15% of your credit score. So there's a couple of ways you can get around it. Like I said before, you can, do authorized users, you can buy trade lines, you can do all kinds of stuff. If you have a friend that is willing to add your name onto a credit card that's already been established for years, have at it. You know what I mean? I'm even interested in letting some people do that, but that's a conversation we can have offline. So you can shoot me an email here if you are interested in something like that. But anyway, Credit history makes up 15%. Now, here is where the collection comes into play. Did you know that, let's say you have a collection account on your credit report that is like 7 years old, right? And this is the only account that you have for 7 years ago. This is your oldest account that shows on your credit report. If you delete that old collection and then all of the other credit that you have, like, has happened in the last 1 to 2 years, removing that 7-year collection can actually hurt your credit score because it is chopping your credit history. It basically is just, if it gets deleted, it's like it never existed. So as far as the credit bureaus are concerned, anything you chop off at the end, it was never there if it gets deleted. They're only going to say that you started to get credit 1 or 2 years ago. I hope that makes sense. I can't really break it down in any other way, but just be careful with the things that you are deleting from your credit report, because sometimes the negative accounts can actually help you because they give you credit history. Okay. You have to talk to an expert about that. I'm not going to lie. So if you want to book a consultation, feel free. You could do it right here. Okay. We'll get more in depth to that. But yeah, credit history, 15%. On to number 4. Okay, so number 4 is new credit. New credit takes up 10% of your credit score. Now, it's good to have new credit show up on your credit report. Absolutely. However, you have to be strategic and you have to do it in moderation. Okay. There's a reason that a lot of credit card companies, one being Chase, they don't like for you to have a lot of new credit within a specific amount of time. They have a notorious 524 rule. Look it up online. It's very interesting. And you need to know these things before you go off trying to get a whole bunch of new credit. Now, most lenders, I'll say some lenders see it as a good thing when you get a lot of new credit because they see, okay, this person is credit worthy. And then they also take into consideration that you could be doing this because you are new to credit. So of course you're going to try to build your profile. That totally makes sense. But for somebody that has way too many in a short amount of time, on the other side, it could also look like you are just shopping around because you are not making enough income. And now you are looking to live off of your credit. That is why you have so many new accounts. So see, it could be interpreted in so many different ways. It really is dependent upon whatever stipulations the creditor has for new credit. Okay. So new credit is not bad. I encourage my clients to get new credit because with credit repair, if you are going to be removing negative items, you can't just remove negative items and then leave empty spaces. You have to initiate and establish new credit. You cannot get around this. Okay. You just have to be strategic. But again, it's only 10%. So it's not a big deal, but it is still something that you need to pay attention to because like I said, if you get too many inquiries in too short of an amount of time and too many new credit cards in a short amount of time, certain lenders are going to they're just going to shut the door on you. They're not even going to care. They'll take your application, they'll run your credit so they can start selling your information, but they're going to give you a decline. Okay. So look up 524 rule. You'll be glad you did. All right, let's go on to the final one and close this out. All right, drum roll. This last one is my absolute favorite, and I wish that it counted for more. All right, the last one is your credit mix. This one is my favorite because this gives you so much more control over your credit score. Unfortunately, it's only 10% of your credit score, but I'm going to tell you how to take advantage of this. Keep in mind that when you have a credit report, you're basically telling the lender how you handle different types of debt. So that's why credit mix is so important. You could either have installments or you could have revolving credit. You need to have both. Okay. So something like a mortgage or a car note, that is an installment. That's an agreed upon amount that you're going to pay every single month. It's a set amount. Now, when you look at revolving, that's credit cards. That could be a whole different balance that's due every single month. So if you have a mix of both of those types of accounts on your credit report, it shows the lender that you are a healthy, responsible borrower because not only can you handle payments that are set in stone and they have a dedicated amount every month, not only are you able to pay those, but you're also able to make payments on time with these other accounts that fluctuate every month. The amount is always different. That really does show that you are a well-rounded borrower. So get on this, you guys. Definitely look out there and get some installment notes, and then also get some revolving credit. So that could be a store card. That could be, a Chase credit card. That could be an American Express, whatever kind of card that is due every month, but the balance could fluctuate. That's revolving. And then, like I said, get an installment note. If you don't have a car, if you don't have a mortgage, that's okay. There are still options for getting installment notes, okay, or installment loans. You can go to Self-Lender. You can go with, there's a whole bunch of other companies, okay? This is not a sponsored video, so I'm not gonna break those down, but I do have other videos where we talk about installments and the different, companies that have them. Okay. So again, credit mix is 10%. So make sure you get some installments and revolving. All right. That's pretty much it, you guys. So that's it, guys. That is the 5 factors that make up your credit score. I hope that you found this information super helpful and that it helped you understand your credit report more. If you are looking to monitor your credit all the time, which is something that you have to do in 2021, go to the links below and you can sign up with MyFICO. You can sign up with Identity IQ. You can sign up with MyScore IQ, all of which we are affiliated with. So look at the links below, click, and just choose your journey. All right. I am so happy that you guys tuned in, and I look forward to chatting with you on the next one. Leave a comment below. Let me know how you felt about the video, and if you have any questions about one of the 5 factors. All right. I look forward to seeing you guys on the next one. Credit Solutionist out.